Hi, this is Tory with Complete Holistic Coaching and Wellness, and I wanted to do something a little different and kind of go over why insurance shouldn't be looked at as a dirty word. A lot has changed since our grandparents' days for sure. So let's get started. Just a quick overview, kind of give you an introduction, and then go into how it can be utilized when you're on a tight budget. In addition, what the long-term benefits are. Most of us know, but it's good to kind of have a broken down view of what that can be. Why it could make for better retirement savings. And then finally, some final tips and takeaways. So the power of communication, and this is something that we've really never done when it comes to finances or life insurance. We really don't know a lot about it. You know, we've done a video about how your money grows, how it's taxed, and why you want to look for certain key points when you're looking to put your money into something beneficial towards yourself. But we really don't communicate about it. And the same goes for insurance. So we kind of want to touch base on that today. So here, with that being said, insurance should not be considered a dirty word. Back in the day, you know, we know insurance sales folks, you know, they sounded like used car salesmen. You know, it was something that's like either you just, you see them coming and, you know, they were coming up to the door because they were door to door, or you would go in and it was a tedious process. And now you still have them, but it's not like it once was. So it has definitely come a long way since our grandparents' day, for sure. And again, are there some bad representatives out there? Absolutely. You want to make sure that you find someone, and we're here, our services are complimentary, but you want to make sure that they have the right reason to share certain products with you as you being the primary focus. Not the product, but you, and how that product's going to help you. You should be that center focus. Okay. Mike and I are here for education first. We are all about education. We used to be corporate trainers. Mike was in the military, you know, so education and support have always been one of our key values. And we continue that even today through our company, Complete Holistic Coaching and Wellness, and also our educational services. So our services are complimentary. They are free to all of our clients as far as our financial education and services are concerned. We pride ourselves on no pressure sales, just valuable information. If we can provide value to you through the information that we provide, we have done our job. If that leads to something afterwards, even better, because that just means that we are helping to facilitate protection for you and your family. And we also provide education to debunk myths about insurance. There's a lot of misinformation out there, and I'll explain why as we go through this presentation. Next, we want to discuss insurance on a tight budget. With everything going up, cost of everything, gas, groceries, inflation is just skyrocketing. We want you to know that insurance is a possibility. So with that being said, here's one of the myths. I can't afford insurance. Did you know that insurance has become more flexible in their premiums to provide coverage at a lower cost? This is done through term insurance, which has come a long way since back in the day. Okay, it's not what it used to be. You had this block of time and that was it. It's similar, but they have added more benefits to term insurance. Did you know that some term insurance policies come with complimentary or free estate planning, even living benefits? What are living benefits? So we know that term provides a death benefit. You pass away, your beneficiaries receive money. With living benefits, if you get chronically, critically, even terminally ill, you can have access to that death benefit earlier to help provide for experimental treatments if need be. You know, something that healthcare plans will not provide money for or coverage. if you need to pay bills, if you decide, you know what, I'm going to take this money and go on a vacation, you can do that as well. There are no limits if you qualify, if you meet those living benefit requirements to have access to that money. Powerful. Term insurance used to be one and done. They've really improved on the term insurance to give you more options. For example, we had a client, she was 22. All she could afford was, $50 a month for her term insurance. Being she was 22, very healthy, she was an athlete, she qualified for $250,000 for this $50 a month. 2 years later, she found out that she was diagnosed with stage 3 colon cancer. A 20-something year old finding out she's got cancer. With a letter from her doctor, processed that information through the insurance company, and within 3 weeks, she had a check in her mailbox for $188,000. No restrictions on what she could use that money for. She could, like I said earlier, it could be experimental treatments. It could be, maybe you wanted to take a trip if it was something that was terminal, maybe to pay off bills before you pass. There's so many options, and there's no restrictions to what you pay with or what you utilize that money for. Now, with the client we just discussed, she is doing well, but she had that money to do whatever she wanted to with it. So very, very powerful. Term insurance has come a very long way. GoFundMes should always be a last resort for any type of big life changes or crises. So we see this more and more as time goes on. It's very disheartening that somebody passes and the family is left with trying to figure out how to come up with money for their burial or for their medical expenses. And if we can help assist with that, we definitely want to, because people don't plan to fail. They just fail to plan. And this is huge. This goes back again to communication. We do not talk about this enough, whether it's finances or insurance. So what are the long-term benefits of insurance? So we're going to kind of pivot from term, and we're going to go into something a little more permanent. So if you ever hear of permanent insurance, this is what we're talking about. So you've got whole life, IUL, and annuities. Okay, so whole life insurance, provides a death benefit, cash value accumulation. So of course you get your death benefit at the end, obviously, but as you're going through the lifetime of this policy, it's accumulating cash that you can have access to. You have lifetime peace of mind. You have the whole life, so it's there until you pass. Penalty and tax-free access to this cash value. And what's great is that, if you decide, hey, I need access to my cash value, when you get that as income, you don't have to claim that on your taxes. It is, like we said, tax-free and clear. Index universal life. Now this, if you look anything up about it online, you're going to get mixed reviews. There's a lot of misinformation about indexed annuities or IULs. Okay? They do provide a death benefit. They do provide cash value accumulation. They provide living benefits, just like we spoke of earlier. Critical, if you become critically, chronically, or terminally ill. Market-based growth without the market-based losses. So if you've seen how money grows in some past videos that we've done, you get that indexed strategy. So you get the best of both worlds, whether it's fixed, like a regular savings account, versus the stock market, which goes up and down, and you get locked into not losing any money. So market growth without those market losses. You get valuable tax advantages, and this all depends on how it's structured. Okay, so anything that goes into a life insurance policy, and the reason we don't hear about this, or the reason there's a lot of misinformation out there, is because the IRS and certain entities that sell other products don't want you to know about this because, one, then they're not making a boatload of cash, and two, through their fees and whatnot, and two, the IRS isn't getting the taxes that they want either. So you're keeping more of your hard-earned money, and any growth that comes with that, you're keeping as well. Flexible premium options. So it's giving you a little bit more. Do you want to pay to it monthly, or do you want to pay a lump sum? It gives you that flexibility. And it can provide a retirement income stream. So say that you've been building up this cash value for 30, 40 years, and you have a nice, decent nest egg, and you decide at your retirement that you want to take it as an income stream. You can absolutely do that. So annuities. Now, annuities is another product that has some misconceptions around it as well, but it gives you peace of mind as well. And granted, it's not an insurance, but it has many benefits. So you get a death benefit with an annuity. You have the cash value accumulation. But the key again is how it is structured. Okay, you can have that tax-deferred, tax advantage withdrawals. Annuities are great when you're doing 401k rollovers because you can have still that tax-deferred, but get a little more growth. You have the safety net of, upside benefit with downside protection, just like the indexed annuity, because it is based on an index strategy. Something else with this, you can have flexible options now with an annuity. Before it was just you had to have a lump sum, and just like most insurances as well, or life insurances was the same way. You had to have a bulk amount, and that was that. But with an annuity now, they give you that flexibility of being able to pay something once a month. Lifetime income stream. So the difference between life insurance and annuities. So with life insurance, that is if you die too soon. Okay, most of us are living longer, and it's really causing a lot of problems with our retirement funds. Well, with an annuity is for when you live too long. So it gives you that security of knowing you can have that lifetime income stream consistent and until you pass away. Most annuity with life insurance, usually by year 100, if you haven't passed by then, they're just going to give you your money, basically give you your money back. And then and whatever you've accumulated with an annuity, it can go up to even 121. So I mean, I plan on living to 150, so mindset, right? And now we want to talk about insurance products for better savings. Okay. As we've seen with traditional retirement accounts, the money can be there and then quickly be gone overnight, faster than it accumulated. If you remember the stock market, crashes in 2008 and 2020, we know somebody that had $300,000 that was lost in his 401k, and it's like, now what do? It's gone. You're not going to be able to make that back overnight, just like it was lost. So how is it lost? Through stock market volatility, through fees, your advisor fees, your administration fees, and if you have, rider fees or any type of specialty fees on top of that. So very, very important to watch. When it comes to certain products through brokerages and things like that, a lot of it is spread out, so you don't realize it until the end. With like an IUL, this is where some of that misconception comes. With an IUL, at the beginning, you may pay more at the front because it's putting that money into the actual insurance itself, because you have different buckets, because it is an index universal life. So you're going to pay more at the beginning, but you've saved so much by that end of the policy, or when you start taking income, is huge. Okay. Back in taxes, when rates may be higher. So, it's something you really want to look at. And if you have a tax advisor, definitely check with them to see what's going to work best for you. And as you can see, with the insurance products, it isn't a one-size-fits-all approach. So it can be tailored to fit your needs through asset protection. Some people have more assets than others, and you need to protect those for your family. Growth or even income, if you decide you want to start just really growing that income in the beginning and then turning it into an income stream for you later, you can definitely do that. The tax advantages, depending on what you go with, if you're going with an life insurance policy, you're not going to have to pay taxes on that. If you go with an annuity or something different, you may have some tax deferrals there, but it may be at a lower rate. So, definitely think about what you're paying in taxes now versus what you're going to pay later. And do you want to pay on the full amount that you have in there, what you've put in plus the interest that you've earned, or do you prefer just to pay with, the smaller egg of what interest was earned versus the entire amount? And then flexible options. Insurance has really changed, and you can do more with less. So here are our final tips and takeaways. So insurance is definitely affordable. Like we gave the example of the young 22-year-old client that we had. Okay, we can tailor coverage to fit your budget. Doesn't matter, $50 a month, $100 a month, $1,500 a month, whatever it is that you would benefit from is what we can definitely assist with. Many options to fit your goals and your lifestyle, even retirement lifestyle. Have you thought about what retirement would look for you? Are you looking to just kind of be around the house, kind of a homebody, or are you looking to be adventurous and travel and live out on the water, or spend a lot of time out there? We live in Florida, why not, right? So really take a look at what your goals and lifestyles or style that you want to have when it comes to retirement or even later in life. Thinking outside the box from traditional retirement savings methods. The guy who created the 401k said he created a monster. He did not realize what the 401k was going to turn into. And if you have an old 401k sitting somewhere and you're not with that company anymore, definitely reach out to us, because a company that either contributes to it, even if they don't contribute to it, they're at least paying the fees. Once you're done with that company and it's still sitting there, you are now responsible for those fees and you're not getting their contributions. So it doesn't make sense to leave it there. And the earlier you begin, the better. As with anything, if we plan and we start earlier, the outcome is definitely going to be a better prospect. Provide yourself and your family with peace of mind in the long term. We don't like thinking about death or what may happen to us down the road. We unfortunately had 2 individuals that we know that we spoke with about these type of products, and they chose that it wasn't time for them, and then we just found out recently that they have now passed. So very disheartening. I'm so glad we had the opportunity to talk to them about it, but it's very unfortunate of what their family is going through right now. GoFundMe should never be a part of the plan. It's great for if you're doing a fundraiser for something, but it should never be a part of your final plan. Your family needs to be able to grieve, and when you add the stress of not knowing if they're going to have enough money to lay you to rest or to pay those bills, that's just adding more stress to them. Let them be able to honor you and remember you in a positive way. Did you know that 67% of Americans have never made a financial plan? Let's decrease that percentage. It's not a long process, but it's something that is very necessary. Again, it goes back to communication, like we said at the beginning. Communication is key, and finances and insurance should be a part of that. Teach your children now. 68% state that they are not on track to retire. You see a lot of the elderly, working at Walmart. as greeters. You know, when you retire, do you really want to retire, or do you want to have to get another job afterwards? Now, if you're into that kind of thing and you just like working and like being active, that's one thing. But do you want to have to depend on that's third, fourth, fifth job? So I'd like to thank you. I hope that we've provided some valuable information for you. If you have any questions, please feel free to reach out to us. There's also a link here for Calendly. Definitely schedule an appointment if you'd like more information, and we'd love to discuss it further with you. Very simple, but very necessary. So take care of your family, take care of yourself, and we'll talk soon. Take care.